Welcome to Trading Lounge and the US indices for Thursday, the 19th of August. And Thursday, in our bullish weekly cycle, we normally find that as our bear day. So we are seeing markets bearish, but I just want to point out a few things. So today we're going to have a look around the block a little bit differently. Normally we'd just go straight to the S&P, but I think it's important to just have a look around at other markets and kind of compare them and see where they are as well. Okay, so that's what we're going to do. We're going to go in a little bit of a different way today. So apologies about that if that upsets anybody. But with the banks, this is BAC here. It's a daily chart. We've got a three-wave move down through here, so we're looking at an impulse wave to the upside here. So we're still one wave short here. We haven't even made a high over here yet for that. So in fact, we may even have all of this up just for wave one and then going up for wave three here as such. It may not be the case, but the thing is that we've got three waves here, and which is corrective, and it's a pretty nice count as 1 and 2 here and 1 and 2 here, and then all the way up here for 1, 2, 3, 4, 5. And Goldman Sachs is the same. I won't spend a lot of time on all of this, but with Goldman's you can really quite clearly see we've got 1, 2, 3, 4, 5 for 1 and 2 here. I won't go into a lot of detail here, but it leaves us up here the same as BAC. Whoopsie daisy, as we've got this corrective pattern here, and as we've been looking at yesterday, we've got 1 and 2 here and 3 and 4. We're still looking for one more move to the upside here for this. It's not that it matters for the indices as such, but there will be stocks still moving to the upside with this. But also what we want to have a look at now is just to have a look at, let's look at the US dollar index first. So with the US dollar index here, this is a wave 3 here with an A and a B and a C for wave 4 here. So we've been counting up this leg here for 5 waves. So let me just go to the 4-hour chart here. And from this wave B here, we've been looking at 1 and 2 and 3 and 4. I won't go into a lot of detail with this. So I just want to point out that, and in this last little section from wave 4 here to wave 5 here of C or 4, we've been looking at 1 and 2 here and 3 here and ABC for 4 here and looking up for 5. So I don't know if we're quite finished here yet. We can see that strong third wave in the middle, so probably a little fourth here and maybe the fifth is in, or, but a little bit more to go there. And this is also the same with the 10-year notes as well, but they've already turned. So I won't go into a big detail here, but on the 4-hour chart for the 10 years here, we've got wave 3 with an A and a B, and we track 5 waves up here for wave C. And then this move down through here, we can see, well, if you're familiar with Elliott a little bit, at least you can see the strong third wave in the middle here. So then it's just about putting Humpty Dumpty together, the 1 and the 2 and the 3 and the 4 and the 5 here. So this is the rally that we've been looking for. So we're going to see a strong move down here for the yields and the rates here for this. So I know that people think that there's a relationship between one market and another, but you want to be a little bit careful about that. So that's on that side of the fence for there. Also, this is a bit left field here as well, but it does sort of pick up the sentiment of, I have seen some charts of the sentiments of the economy, and it has started to turn down in certain charts. So with Ethereum here, in a bit of a nutshell, we could count this down as corrective or impulsive. Okay, I don't want to argue about that, but we have reached the 61.8% mark here, and the market is turning down. So there is a reasonable chance that we're going to see a deeper correction. I won't say it's going to come all the way down here, but that's certainly plausible. But we're getting that sort of turn down there, and we're also getting the same with Bitcoin as well here. So Bitcoin has got a very clear from the top here, 1 and 2 and 3 and 4 and 5 for the A wave, a B wave and a C wave. So we're just talking about sort of markets, sort of moving down together. If we see Friday moving down in the US markets, then we've got a problem, because I always expect, if you know me, then you'll know that Thursday in our bullish weekly cycle is bearish. So it really will all sort of gravitate towards Friday. So with Friday, and we'll talk about the timing for the Jackson Hole and so on, like we've been doing over the last few videos as well. Now, I want to go to stocks now, so you've got a bit of an understanding of where stocks can be. So with Amazon here, obviously it's a big fish, and looking at a possible top here of wave 3. So looking down here as a 5-wave move. So it's probably land shortly, probably get that rally on the Friday, I guess. But still, it's in that bearish mode, and it's starting, because with the indices, we're looking for that top of that wave 3 there, as we are with, the banks as well, the US banks and and other markets around the world as well. So we're looking for this larger 4th wave to come into play. So there's leaders and there's followers. So this particular market is probably, one of the leaders to the downside, and will help pull the market down in that regard. I won't go to the intraday on that. I'm just going to go through these stocks quite quickly. This is a daily chart for Alphabet, and yesterday we talked about having a top in play here for this as well. So there's a great case for that. Of course, we need some evidence for all of these moves. So in these cases, when they're just starting here, we need to see an impulse wave moving to the downside. And sometimes, I talk about, having an impulse wave in 5 waves down as such to help us, establish the market direction. But also we need to understand that we don't always get that clear wave. We could get a move down like this and then a move back up. And then we get a move down like this a little bit, which is a bit shorter. And then we get that high move up here. So it starts to look a bit sort of corrective. And then we get another one like this as well. But they can just be series of 1s and 2s and 1s and 2s and 1s and 2s. And then suddenly you get caught out with a strong 3rd wave coming into play. So it's not, I'm just making you aware of that. I won't beat it to death, but that's something that we'll need to look forward onto, at least the crypto as well. So also going to call a top in for Apple as well. I think I need to justify that on the tick chart, but in a nutshell, we've been close anyway as 1 and 2 and 3 and 4 and 5, and we've had a good trade in all of this. So let's go to the tick chart. Don't need that there anymore. So it's a little bit rough and ready. I understand that, but from wave 4 here as 1 and 2 and 1 and 2 and 1, 2, 3, 4, 5 for the 3rd wave, ABC for the 4th wave, 5th wave, 3rd, 4th, 5th. Now I know that there's overlap here, but as I've been mentioning over the week and the week before, is markets don't always top the way that you would expect them to or you would like them to, and you could probably dress this up in another way as well in terms of WXYs and all the rest of it. But I just like to keep things 1, 2, 3, 4, 5 ABC as much as possible. It's just for the simplicity of it, because Elliot's tough enough as it is. So in this case here, we're certainly seeing the market move down. So what I could say is, going back to our bullish weekly cycle, so we'll expect Thursday, tonight in the US markets to be bearish. But if they're bearish on the Friday as a whole, or the indices are, then you know that we've got a change in trend at that particular point in time. So, and Square, we called a top in for that as well. I won't go to the intraday and bore you to death, but expect to move down to the medium level here at 250, and then we'll see a bounce off that, and we'll pick that up. Perhaps we'll have a look at that tomorrow on the intraday. But Very clear here that we've got the A, the B, and the C wave, and then we've been trading and tracking this up here in various ways. And yeah, we've made a little bit of pocket money out of it, so that's okay. Yeah, and now, if this is correct, well then, this wave 4's, the first thing that we look at is to see the wave 4 pull back to the wave 4 of one lesser degree. And yeah, and maybe, this wave 4 here is a flat correction because it's in 3 waves, an A wave, a B wave, and a C wave for the A wave and ABC. It could be the fingerprint for a larger one over here. This one over here is a higher degree of this structure, so we can expect it to be 60% bigger as a correction. So you can see in terms of time what we're up against. And wave 4s are complicated, and out of the 11 or 12 different types of corrections, then that's what we're up against. So with Facebook here, we looked at this as 3, 4, 1, 2, 3, 4 here, and then I'm counting up here. But I can count a top in here, as I mentioned yesterday, so we may have that. That would be confirmed if we make a low here. So if we take that low out here, then that's confirmed at that point. I won't go into this at the moment because we don't have a trade in here, so there's no need to do that, but it's possible to have this top in play at this point, but we just need to, confirm this. And Tesla, okay, so this is a bit of a different situation here. As you can see, we're already in a correction here for this, and there's a few ways that this can play out. The interesting thing, yesterday we talked about having this as the A, the B, and the C wave up here for the C of B, because it's pretty close into the box here. So I just want to say that it is possible for it to move from the low here up to the 61.8%. here. It's also possible for it to move down here because it is an impulse wave here and move up in 3 waves here. But the 3 waves here is not looking good. It's looking more like an impulse wave. So I am going to go to the tick chart here. So we've got a clear 5 waves down through here, and this is also a clear 5 waves up here, but it's already met the 50-60% retracement level at this point. So I'm wondering if we get something, like this, and then down at that point. It's either that or we get this up as wave 1 here, back for wave 2, and we head up for wave 3 in this here. I've got a very small position in this market, so I'm kind of, I'm looking at it with a little bit more diligence, I suppose, a bit more of a connection, I guess. But yeah, we've got an impulse wave up here, so it was a little bit odd. But we can expect a 50-60% as a starting point correction if that's actually finished at that point. So, okay, I got it pretty much spot on there anyway. So somewhere down into this space here before further upside at that point. Yeah, but that's sort of where we are at that with Telstra. Okay, Tesla. Okay, so it brings us to the S&P and the Nasdaq and the Russell. So I think I'll have a look at the Nasdaq first in this case, because yesterday we also were looking to call a top in here as well. So in this case here, we've got a wave 3 and a wave 4 here, then 1 and 2, and then working up here for wave 3 and 4 and 5 and yada yada yada. So there's different ways I could have counted this move here as a wave 4. I understand that. And I also understand calling tops in as dangerous business as well, right? So we need evidence for that. But you know that I have spent this week, really focusing on the bear market. I have counts that can take us higher, but it wasn't going to be the case. Well, it still could be, but I just really wanted to go into protection mode, that's all. So that's all I've been doing at the end of last week and this week. And yesterday we looked at this here as well. looking for a way to call the top in here as 1 and 2 and yada, 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 all the way up here for this. So this is starting to unfold quite nicely here now. So that's why I want to go to the tick chart here first. And we need to bring in more data, maybe 20,000. Is that enough? No. 50,000. Let's go whole hog here and go for the big kahuna here. So, yesterday we talked about this. So wave 4 here going up for 3 and 4 here, and then 1, 2, 3, 4 and 5 in here, and calling that top in there, and then looking at this here as 1 and 2 here, and 3 and A, B, C for the 4th, and down for the 5th here for 1, and then an A and a B and a C here for 2. And then we looked at this being down for 1, back for 2, down for 1, back for 2. So I can just straighten that up there a little bit, and we can look at this over here. Now, this is what I was saying before. It's like a series of 1s and 2s. Now, it's still possible, but it has put us short. We came to the point with this is that we could go long here, or we could go short here with that. That was pretty much the go with this. So we can bring that over. We can, if that's breached there, then we're going higher at that point. So that's the risk that we've taken on at this point. So I'll leave that at that. And if you're going to be short, you may have gotten a better, you could have gotten, that would have been the nicer one here. So when we look at these things here, this is, this is just the bear market classic trading levels pattern and the variation on that. Well, the classic trading levels pattern is this one here, where it comes down, bounces off the level, goes back, comes down, and then finds its way back up above the level, and then drops. And we use this one, we could use that one, or we could refine it into that one. And this is the level at the 15,000 there. And in this case, it's quite sort of clean. So we've got a bit of a variation here. It was, it came, let's say, it bounced down, came through, retested it. So it's kind of a bit of a, I suppose we just call that at the level, really. It couldn't really get support on that level and then drop. So we could have shorted this one or this one here. But yeah, so let's just, obviously we could look at this as a third wave down through here. We'd also look at this as some sort of 1 and 2 in here, and 1 and 2 in here, and some sort of third wave in here. I'm not going to get to this in the moment, but it will be something like this here, just, and then there's going to be some sort of ABC back up here testing supply again and then going down. So we'll just, if you've got the intestinal fortitude or the balls, then just leave that as is there. That's your risk. If that's too much risk for you, then take money off the table here for that. Okay, that will so you can breathe easily, and we can look to tomorrow. We'll look for a way to move in again. We normally find, it's sort of like the Mondays that can be the bearish days, that catch you out. So be careful about holding. Be careful what you hold into the Monday. So we're going to go to the S&P now to go the long way around today. But anyway, so I've been harping on about the Jackson Hole dates coming into next week, but it does appear that markets are panicking much earlier. So yeah. What we're looking at doing now is, looking at this as 1 and 2 and 3 here. But first of all, let's just imagine that is the top for a second, okay? So this would be the wave 2 low here, and let's just assume, because that's all we can do at this point until we get some evidence about this, but that's the 38.2% retracement level there. So that's just a bit of a starting point that we can work with, okay? Obviously, we adjust as things go down. So pretty much down to 4,000 at that point. Let's move this now. We don't need that. And everything being, if this is true, then we would be looking for some kind of correction, which normally breaks, wave 4 normally breaks the trend line correction as well, and then heading up to 5,000, the finishing line, the psychological finishing line at that point. So yeah, that's sort of it there on that. So we need to go in and have a closer look at this. So on our website, you'll notice that we've had this up here as a ending diagonal triangle as an A and a B and a C wave here for that as a finish here. So that's one way to look at it. But today I'm going to stay with my 1, 2, 3, 4, 5s, and I'm just going to look at this being in, because the other way to count this would be 1 and 2 and 3 and 4, which we've been doing, but it's obviously just fallen out of bed, and there's a good case for this to move down, but we still need to gather evidence for that. And this is our 38.2% retracement level down here for this. So when a market, if it does come down through here, all this here as group 1, 1, 2, and 3 here, it'll get very choppy and bouncy in here, all right? So if you're heading towards that way, and of course there's going to be a bounce off the 3 here. And let's go in a little bit further here. So we're on the 4-hour chart. So this is where we left off yesterday. Let's talk about all my issues and mistakes. So first of all, I was looking closer to the Jackson Hole date, but the 30th there, we were going to clean out, probably on the Thursday, which is next week. So I'm still a long way out. So like totally wrong. This move down through here so far, we can see it as 3 waves, not 5 waves. So in this case, so as I mentioned before, sometimes we get a nice clean 5-wave move down, and that makes life easy. And then you don't have to panic that much, because after the 5 waves, we'll get some sort of correction that can come back 40%, 60%, even 80%, and then down. So it looks like we're getting something of that particular nature there. But this could also be corrective as well, as an A and a B and a C wave here. Don't forget the banks still need to make another high, and so on. So we just need to be a bit careful about that. And the other move that can come down is where we get a series, and this could be the case too, where it gets a little bit awkward to see. So we get that really high move there, and it overlaps that wave 1 there. Do you know what I mean? And we get a series of those. So then it starts to look corrective, but in fact they're just 1 and 2, 1 and 2, 1 and 2, and then they get to the middle of the 3rd wave, where that's where you start to get gaps, and they drop down like that. So you need to be a little bit careful about that. But this topping area through here, from wave 4 to wave 5 here for this, if we are indeed going to drag this across over here. I did have a look at this last night on another charting program. So we're going to just have a look at that. Just, sorry, lost the plot. Indices. And I think I used this one here, the SPY, and I think I use 15 minutes. Yep, this is the one. So what I did here, so this is that blue wave 4. So just picking it up from that blue wave 4 to blue wave 5 to the top here. So I was looking at this and I was thinking, okay, well, I can count 5. I can go 1, 2, 3, 4, 5 for 1 and 2 in here. Right, and then I can go 1, 2, 3, 4, and then 5 here for 1 and 2 here, then 1, 2, 3, 4, 5 here for the 3rd wave, 4th wave, and then looking at this is the 5th wave here, a little bit dodgy, but it's there, ABC for the 4th wave, and then here, looking at this here as, well, look pretty clear on wave 1 here, and then 1, 2, 3, 4, and 5 here for 1 and 2, and then all of this here is wave 3 here, and 4 here, and 5 here for the 3rd wave, 4th wave, and the 5th wave here. So it's a bit rough and ready, but there's only, it's like this move here. See, it looks like 3 waves, but and this one here looks like 3 waves. But this one here as an A and a B and a C for wave 4 here makes sense. So have this one here as a wave 3, to have this here as 5, 3, and 3 here is just a little bit unusual. So there's more than likely a 5-wave move in here. That's the only weak spot that I can find in this move here. So it can be counted as a top in play here with 5 waves. But what we need to do now is we need to gather evidence for this. And I can certainly see from here, based on this market, that we've got 1 and 2 here and 3 here, 4 here and 5 here. So we'll need that to finish off there. This is the SPY, so it won't have that, how do we get rid of that now? Let me just go back the other way then. Let's go back here and let's go in and just have a little look at this. This is my tick chart here for this. So we're looking at this as a 3-wave move yesterday. That's what I got wrong. So apologies about that, but you know, it happens. We're all wrong now and again. So what sort of interesting, okay, well, the SPY is much the same as well. And this is a bit like the NASDAQ as well here. So, I'm kind of interested in this leg here at the moment. This is what we'll be working on over the next couple of days. So this move here as wave 1 and 2 here, and then 1 and 2 here. And then this obviously through here is some sort of wave 1 to this point, and then 1 and 2 and 3 and 4 and 1, 2, 3, 4, 5. So yeah, there's still more to go in here. So I'll do some work on that because we need to find a way in now for this. So that's what I'll do over the next session. So I'll figure out today's Thursday here. You'll have Thursday in the US tonight, and so we need to prepare for Friday and especially Monday, because that's where, if there's any damage that's going to be done, it's going to be really on the it will start on Friday and we'll feel it on Monday. So yeah, I mean, the thing with this moving down through here now with this is that, I mean, especially if it takes out this low here, right? Then it makes sense to call this wave 4 here and wave 5 moving up here. You know, like I counted before, so this 1 is over here, so 1 and 2 and 3 and 4 here, and then coming up for 5. So if that low gets taken out, then that's that. The only other way I can sort of see this sort of developing really is looking at this as a 1 and 2 up here and coming back into this space here, but yeah, it's a long shot. But anyway, these are the things that these are the things that I need to mull over. So, yeah, just to recap, I've got the top wrong, but it is possible that we've got a top in place, and it's really sort of showing up in the NASDAQ and the NASDAQ stocks at this stage as well. But all we have for the NASDAQ so far is we have, you know, if we're talking about the bear market, there's a better case for it here. So I'll talk about it here and so on. But we have this wave 1 and 2 here, and then a series of 1s and 2s here. So I know that we should be going down further, at least, even if there's a correction. You know, we could look at this as an A wave, a B wave, and a C wave that's not finished yet here. But where would that leave us? Because we need to finish this off as 1 and 2, or I'll double check all of this. But I can still see that we're not finished from that point there down to here. We will need to count 5 waves, and we don't have those 5 waves yet. So we're not finished. So we do have time to play around with this. But if that was an A and a B and a C, where would that leave us in the bigger picture of all of this? So that's what we need to also, that's the other side of the coin, because instead of just jumping to the bearish side, we have to look at, well, what bullish moves can there be, you know, and then put your Sherlock Holmes hat on and your pipe in your mouth and mull it over. Alrighty, I'll leave it at that. Thanks for tuning in, and let's look for setups coming into Friday so we can capture any bigger moves to the downside. And we'll also need to put our bear hats on probably and take our bullish caps off. So we need to think differently. And I know it's interesting, isn't it? I mean, I'm old and crusty, so being long or being short to me doesn't matter. But if you're reasonably sort of new to the markets, you probably have a preference of being long or being short. To beat the markets, you really need to beat yourself. You need to find out you need to overcome your own opinions, your own weaknesses, and you need to work. It's really, trading is really about yourself, I guess, to a point. But anyway, that's another story. But a couple of glasses of red or a good joint, and it'll put you in a different mindset to get yourself out of your current one. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.